A distinction without a difference. Hi, Dean Jenkins with FollowMeTrades.com, and I'm looking at the S&P 500 daily chart here, and there's a super clear bearish setup here. But I open with the statement, a distinction without a difference. And, I am a confessed but unrepentant and not in recovery news junkie, totally addicted to news. And here's Jeremy Powell, and he says GDP could shrink by more than 30%, but he doesn't see another depression. Well, that's the clearest case of a distinction without a difference that I've ever seen. It's ridiculous. So the definition of a depression is a decline in GDP of more than 10% over a protracted period of more than 3 years. So, it's only going to, it's going to go down 30%, but I don't think it'll last 3 years. That's kind of like saying, right before the plane got scattered all over the runway, it ran out of fuel. So it wasn't a crash, it was a low fuel event. Right? You can spin all the euphemisms you want, man. It's a dire situation. And a 30% reduction in GDP is a freaking huge deal. And when you look at the number of businesses that are on hold and the, 35 plus million people out of work on unemployment, not spending money, and the consumer is the number one driver of the economy, and pretty much every S&P 500 company not forecasting earnings because it's too uncertain. You just have to expect tough times. For a while, I'm all about hope, and I'm all about optimism, and I think the American economy is strong and will rebound at some point. But to say, well, we're going to have a 30% reduction in GDP, but it's not technically a recession, it's ridiculous. And, Washington isn't doing much to help. The next round of stimulus, which is probably appropriate and needed, appears that it's going to be delayed. The House passed the HEROES Act, and the Senate Majority Leader Mitch McConnell called it a parade of absurdities. So the games have begun, and while 35 million people are out of work and drawing unemployment and probably not spending very much money, the games continue. So you can sense a little frustration. It'd be nice if we just kind of focused on what matters here. But let's focus on reality, the charts in front of us. There could not be a clearer technical setup for a correction. So as I've talked about for weeks, we had this huge move down in March, really, really big, unprecedented in its speed and magnitude. And then this pretty incredible move back up, which failed just under the 200-day moving average, started down again. Look at this red pyramid, which is a low, lower high, new low. Yeah, Thursday, Friday, the market was up. Yeah, futures are up overnight. On the S&P right now, about 35 points, 1.18% at 2880, implying if they stay at that level, a open somewhere around here. That does not change this trend. I believe this is an important resistance level. I believe we got a low, lower high, low, probably a lower high on the new lows, and I will be trading that. So again, hope, optimism, incredibly powerful, good things need to be based in some degree of reality. I think we are destined to go test the March lows down here, maybe go below them. Yeah, we may get an up day or two, but until we get above here, this high, I am not convinced. And I am using my normal reality-based analytical methods. I'm using risk control. I'm not betting the farm on anything, because anything can happen. But the overwhelming probability is, I think the economic consequences of the coronavirus impact are going to be becoming more and more clear. I think the country will bounce back. I think it will take a while, and I think the market is headed for some lows. And I'll be looking for that and trading accordingly. So that's my take. Could be wrong, but I'm probably not. So the key level to watch is if it gets above here, about 29.63, then I'm probably wrong, and it's off to a V-shaped recovery. If it reverses before there and heads down, then my thesis is probably correct, and we're heading on to some new lows. And I certainly don't wish any of the buy and hold 401k mutual fund people to lose their money, but they should tune in, right? Because there's money to be made, there's profit to be made in a dramatic market downturn. And we made it during here. We made money on the way up, and we will probably make profit when it heads down again. Look at this. When it first started down, it went down and came up about like it's doing right now. Oh, it's not that bad. It's going to be okay. Before it did that, I think we got that coming again. So keep your powder dry. Be ready. And if it happens, I will do an update. Hope I don't sound pessimistic. I'm not pessimistic. I'm realistic, and market cycles exist, the realities exist, and I think the country will recover eventually, be stronger than ever, but we do have some downside coming in the stock market and profit to be made from it. So that's the update. Thanks.